Hello, everybody. Welcome to our April 15th edition of This Week in Crypto. I'm your host, Brian. We may be joined by Maxim here in a bit. Thank you to Max for running the stream today.
Yes, we
it's
are.
been
Why'd you?
hello. Hello, great to have you here.
Yeah.
So it's been kind of an up and down week. It's been frustrating kind of both for the bulls and the bears, lesser for the bears, as we can see, because prices have declined. And they've been pleased about that, of course. But people were getting optimistic once we got up to that 41.5 to 42K range for Bitcoin a few days back. And now it appears things have settled back down to right around 40K, which appears to be, both a psychological support level for its nice round number fashion, as well as the fact that it is tending to function as a resistance and support level right now. Every time things are above it, we see that 40K is a bounce number right now, Max. And when it gets below it, it seems to have a little trouble breaking it. What have you been seeing yourself?
Yeah, there is obvious pressure.
Yeah.
But we'll see when we go to the match. Actually, I'm also wondering what you will share. I didn't spend too much time. There are some good signs, but let's see. Maybe you will share some bad signs too.
Yeah, for sure. I definitely see a combination of both in the Bitcoin metrics, as well as many altcoins right now who've had their share in the sun. But overall, they've been hammered a lot more than Bitcoin on average over the past week. So we'll get into why that might be happening, as well as maybe a few bright spots. I mean, looking at the top 100, I would imagine very few people assumed that ApeCoin would be the best returning asset in the top 100 over the past week. But here it is at plus 12%. We had Toncoin at plus 8%, GMT at 6%, Shiba 6%. But these are pretty few and far between. Most of the big projects declined pretty hard. Luna was one that really got hammered a lot, 17% down over the past week. Waves continues to retrace after it had a pretty incredible late March, was having a couple weeks, I think a 2-week run where it was above 300% there. So it's coming back to earth. And then Ethereum, of course, also just barely hovering above 3,000 right now. It's dealing with its own support level right at that 3K round number tier right now. So we'll jump into a lot of it. And just to remind everyone, as always, we do not give investment advice during these calls. We simply try to show you what the metrics are indicating right now and try to paint a picture in terms of what the most likely outcome will be based on historical trends and patterns that we've seen in the past and how they measure up to right now. So keep that in mind. Get your questions ready. We'll try to spend the last 20-25 minutes going over some altcoin requests, as we always do. So feel free to throw a few in there. Remember that ERC20s are the ones that we have the most data on. If it's not an ERC20 and it's not a top 10 asset or so, we'll be a bit more limited in what we can share. But for now, why don't we move on to the first thing I wanted to show, which is the spikes in inflation and in the term CPI, which is the consumer, consumer price index. And it's very, very clearly been showing that these spikes are big price turnarounds. We saw way back in February, mid-February, 2 months ago, we saw a local top right as the mentions of the CPI were starting to pick up steam. We saw a mini spike here around March 10th, and then look at both inflation and the CPI getting a ton of discussion right around the time that the FOMC announced the inflation rate spike about a month ago. Since that time, we jumped from 38K, went all the way up to 48K, give or take around a 25% increase there. And since this time, we've actually declined all the way back until we hit this CPI. We had a mini bottom here. This was kind of the true bottom. And then about a day later, we had another big mention of the CPI as the data was released. and the price actually shot up since, but has now declined a bit. I'd be very interested to see if the price falls below where it did when the CPI spike happened. I'm curious because you were involved a little bit with the article that was released, if I am not mistaken, Maxim. Do you have any takes on, why these spikes have had such an impact on the markets?
Oh yeah. I mean, there is an obvious, obvious reason after you understand it. And you see the spikes, they appear on the turning point. So what we know about market behavior, that price moves or starts moving some direction. Initial phase, there is no clear reason why it starts. So we even say, no, it will come back to where it was. But the more we go in the direction, the more we get into idea or rationalization or explaining why it has happened. The explanation of why price moved and has to keep moving always comes, or very often comes, at the final point. Okay? It's where the crowd becomes convinced, yeah, in this case, inflation is so bad, the first spike. Crypto is here to save. And crypto turns around and comes back. And then this blue one, the inflation is so bad, but this time it's the other way around. It says because the Fed will have to tighten its soft monetary policy, and everything and stocks and crypto will keep falling. And what is happening? It turns around again. Mm-hmm. So the spike to specific topic like inflation lately, it's exactly like this. We rationalize it. We use this reasoning, because inflation and whatever is connected to monetary policy and everything, to explain price action which already has happened. And the moment we do it, we know we think, we believe we know the market. It's exactly where market says, oh, wait a second, I have a surprise for you. You have no idea what is happening. And here is also very interesting that it's the same exactly reason. One time inflation, second time inflation, but used for different purposes. And this is so important to show. Don't believe in stories. They used, people forget, the same story can be used to explain different things. Yeah, always look into context. Why people say always look into price action. This has happened before.
Right.
Yeah. Mm-hmm. It's fascinating and interesting, and because your mind has to be kept very, very, attentive and flexible. Yeah, don't stick to any theory, or there was a stock to flow. Everyone was convinced 100,000, and since then ever goes down. So better to be a minority and speculate on something which is yet unknown to majority or not priced in.
Right. Yeah. And you mentioned the stock to flow ratio. There are theories out there that believe that it still has truth to it, but people need to en masse stop believing that the stock to flow chart is real. And once there is a disbelief in it, that's when things actually do come to fruition. But in terms of this chart here, I mean, we can clearly see that inflation and CPI have both been major topics over the past 2 months or so that have really impacted the future direction of the markets. Going off of history, the previous 2 instances of one or the other spiking, it tends to mark either a top if prices are going up or a bottom if prices are going down, depending on if there's optimism or fear related to these subjects. Right now, it appeared to be more related to fear, which intuitively you would think would be a good thing. So historically speaking, this looks to be more of a bullish marker than a bearish marker, in my opinion, and in many people's opinions. You can check out the article that we wrote just a couple days ago here, and we talk a lot more about it, and what we're seeing kind of coming in our next few weeks or so. So I would recommend checking this out. And if you haven't checked out our insights page, we've got a lot of great articles here all about some, smaller assets like MLV, and we talked about Hedgix being delisted from Binance, Aave, Balancer. Lots of good articles that we've put up over the past week, and I'll be putting up a bi-weekly report myself in the next 24 hours or so you guys can look out for that. In the meantime, on that same note of kind of real world and especially US related events impacting the markets, we can take a look at how the S&P and the Bitcoin and gold correlation are all staying intact or are starting to break apart, because this is always very relevant to identifying when prices will have future breakouts. Generally speaking, we look for correlations that are essentially zero, not super tight correlation, and a definitely not an anti-correlation where equities are going down, Bitcoin's going up. You want to actually just see that they are both functioning in their own way without interference from the other. I'm going to give this a quick hard refresh because sometimes full screen does what it just did and shows a blank screen there. Now it should work, and it does. So what we're looking at right now is Ethereum, not Bitcoin, in green here, related to the S&P in blue and related to the gold price in gold. The reason I chose Ethereum is, quite frankly, it has a tighter correlation to the S&P over the last 6 months or so. And especially true, like if I zoom into 3 months, yeah, look at how tight that correlation is, guys. If you guys haven't been keeping up, the increase in retail traders and the overlap in many equities traders coming into crypto has meant that there is a lot more fluctuating up and down in tandem the way we're seeing right now between Ethereum and Bitcoin to an extent and the S&P 500. The correlation has continued to be tight. Up days on the S&P, we tend to see Ethereum go up. Down days, we see it go down. Right now, it's another down day in the S&P, and we'll see if Ethereum follows suit. It's a pretty big down day where I'm seeing the S&P down, at least as of like 20 minutes ago when I checked, it's down around 1.5%. So that would be a bit of a bearish sign for Ethereum and Bitcoin to an extent. I'll overlay Bitcoin too without letting it get quite too crowded, just so we can see how it's compared to Ethereum in the S&P here. And you can see it's just a little bit more off compared to what's going on with the S&P. More or less, Bitcoin and Ethereum are quite tight though, so this isn't a big shift. They were a little more loosely correlated, where Bitcoin was following the S&P. Bitcoin and Ethereum were very close here, and the S&P was kind of doing its own thing in January. But they've all really linked up here over the last 2 months or so, probably right around when the war was announced. That's when I've really noticed that things have gotten, kind of fluctuating in unison more so than it has in a very long time. And then, of course, gold is continuing to do its own thing a little bit, but even gold has settled down and stayed in a bit of a similar pattern to the other three. Do you have any further thoughts you'd like to mention on this one, Maxim?
No, it's obvious. Correlation is strong. Yeah, it will not stay for the only important thing here. It will not stay forever. These things are changing. It's like in the cycles.
Oh yeah.
And the longer it stays correlated, the stronger it becomes the case. It will, depart from this correlation. We never know when exactly and what will be the trigger, and if will be the trigger, or simply crypto starts moving in opposite direction. And then after some time there will be explanation, again, rationalization why it should have happened, but it's 98% happen. I think pretty soon. Just we don't know exactly.
Yeah, I mean, we have the FOMC announcement coming up in I think early May, like the second week of May. You guys can correct me if I'm wrong. That would be probably the big trigger point where we'll see whether it's a really good thing for crypto or not so good thing for crypto. But you know, another rate hike could be in order then. We'll have to wait and see. In the meantime, we can start looking at some traditional metrics. The first one I wanted to kick things off with, I'm going to give this a hard refresh too, so I can full screen it. The first one I'm going to look at is the ratio of on-chain transaction volume in profit to loss. And let me switch back to that template. Full screen it. So here we go, guys. I really like this metric a lot. I think it's been a very good historical top caller, and to an extent a bottom caller. Bitcoin here is in blue and Ethereum is in yellow. You can see that the two have similar but not always alike spikes up and spikes down. The up spikes indicate that people are transacting their Bitcoin or Ethereum while they are in profit, while the coin is being moved when the price of that asset is at a greater price than it was when they first obtained it. So that means it's a positive profit-taking transaction. If they move it while the price is below the price where they obtained it, that's when it'll be in the negative territory. Generally speaking, the largest spikes you'll see on this graph are usually going to correlate with local tops. We saw a very big one here that we actually talked about on Twitter when it happened. And sure enough, this was the local top. We saw the price at about 48K then, and about 2 weeks later, we're down about 15.5% or so. So that was a very good indication that profit taking would be justified here. Let me take off Ethereum here because it won't be too relevant to the rest that I show. You know, another big spike here, you had about a day to react to it before prices dropped. And then notice how it got really low here. Let me switch this to filled area so I can get negative back. There we go. So these negative bars subsequently will indicate that people are capitulating and trading out of their assets while they're at a loss. And that is going to be more of a bottom indicator. We've seen a few of them that have been maybe a little misleading. That's why I like this maxima is a little more of a top indicator than a bottom. But you know, like seeing these kind of bottom indicators here, that was pretty legitimate. This one as well. It's definitely more of a good sign than bad. If nothing else, when you see these bottom spikes, it means that people aren't taking profit. So that in itself is a good sign. That said, you know, we've seen this one kind of give a little bit of a false story. This was a very good top indicator because it happened right before the big drop off from 43K down below 40K at one point, before kind of ranging right at that spot. And then yesterday we actually had another good negative spike. And then this is kind of real time. So this is a partial day. We're about a little over halfway through the day as far as UTC time goes. And it's another profit-taking spike, which is a bit concerning. We'd much rather see something down here, as I said. So seeing basically this right now, it's on pace to be the second largest ratio since November. We'll see if that holds, right? Because it's still an incomplete day. But in a vacuum, this is going to be a bit of a bearish signal, at least going into the weekend. But like I said, there's a lot of noise in here and many different scenarios can play out. Just know that all things considered, you want to be more wary when you're seeing these high spikes here. And we'll keep a close eye on it to see if it continues to stay at this high range where it's, you know, the ratio of profit taking is well above selling at a loss. So we can react accordingly going into the weekend. All right, let's take a look at, let's go back to our main charts. I'm just clicking out and going back into the template so we can reload it. And we'll start with the usual suspects that we try to analyze to look at general utility. And that would be circulation and daily active addresses. Starting with circulation here. we can see that there's been a slight climb. Things were really bottoming out the second week of January, where we were getting an average of about 165,000 Bitcoin moving per day. That has climbed up to above 200 at about 210 now. And we're starting to get close to a 6-month high. In fact, no, I take it back, at least according to the trend line. So this is a 30-day trend line. We're actually at the highest spot. I thought this was lower, but it's not. This is the highest circulation spot we've been in, at least in the last 6 months. I'll zoom out to a year just to see when we were last here. Yeah, that's a very good sign, actually. I didn't realize it was climbing quite this much, but if I go back to 2 years, yeah, then we finally see a previous time where it was this high. So the last time we were at about 210, 215 per day was way back in January 2021. So we're talking about around a 15-month high in average circulation right now. And it's really crept up through this volatility as, bulls and bears have battled quite a bit through this ranging pattern. And we can take a look at how it's looking on our model, which I preloaded as well. Let me zoom in just a tiny bit. And yeah, this would confirm that we're looking pretty nice right now, guys. So we're halfway through April, and we're actually seeing a clear bullish divergence. So on a 1 to 5 scale, red, orange, yellow, yellow, green, and green, we're in green territory right now, indicating that we are getting more than enough unique Bitcoin moving from address to address on a daily basis compared to where the market cap currently sits. So this is an extremely good sign in terms of utility and the amount of Bitcoin that's actually being transacted between wallets right now. So it may seem as though a lot of doom and gloom is happening and people are dropping out of crypto because we've dropped so much since the all-time high back in November. But this confirms that the actual amount of unique coins being moved is moving in the right direction, so much so that we're seeing the first real full bullish divergence that we've seen since December 2017. Who knows if that's going to hold up? But at the very least, I'd be shocked if the month ended much worse than like semi-bullish here, if the circulation starts to drop off a little bit these final couple of weeks. So on the circulation side, I really love what I see. And all of you bulls should be excited by that. As far as daily active addresses go, more run of the mill, nothing to be too excited about, but it's also not dropping off a cliff either. It looks like the peak over the last 6 months, we were getting about 981,000 or so, maybe 982 here on right after the all-time high happened. And we're sitting now at about 917. So a modest decline. We'd like to see the amount of unique addresses pick it up a bit. But overall, this with circulation up and daily active addresses just slightly down, this tells me that there are less addresses on the network that are interacting, but those addresses are moving more Bitcoin than they were back during the all-time high interval back in mid-November, about 5 months back. So not a bad sign here. I think overall utility looks better than usual. I've especially been happy to see that through April, things have really picked up after it was more of a stuck in neutral period from January to March. So very good stuff there. We will move on to MVRV now. Check out what's going on here. So MVRV, for those who don't know, is the measurement of average trading returns. In this case, over a 30-day period, but you can look at other intervals if you so choose. Generally speaking, the higher the average returns are of those who have traded Bitcoin in the last 30 days, the higher means that it is more likely that prices will correct. And the lower those average trading returns, the more likely prices are to bounce. Generally speaking, we have a plus 15% region right about here, and we have a negative 15% region right about here that mark the very high level of confidence zones of a correction here or a bounce here. Right now, we are sitting a little over halfway toward that opportunity zone, which means that we're in a better spot than average, historically speaking, that prices will rise. So if you are in Bitcoin right now, or you open a new position, you are opening that new position in a historically better spot than usual that is less risky than when things are in positive territory or even in neutral territory. Generally speaking, whatever interval of MVRV you're looking at, things will fluctuate around 0% over time because it is a zero-sum game, just like any other sector here in crypto. And we should be pretty happy to see the fact that the MVRV is still in negative territory, which would make sense considering the drop off of, what did I say, about 16% over the last couple of weeks. If you were to have seen something like this back in late March when things were getting to around 48K, this would be a pretty good sign that profit taking was justified. It doesn't always mean that we're going to see a 16% drop, but in this case, MVRV predicted things quite well, just as it did back in early February, a couple of weeks before the Russia-Ukraine war announcement happened. The last time we actually got below the opportunity zone was in late January, and you can see what it did, between this time and about 3 weeks later, going up about 29%. Sometimes you won't be so lucky though. Like in early December, we had that dip below the opportunity zone. We did get a nice dip to reward people who bought in right below that. But once it got above that opportunity zone again, it didn't get all the way above neutral or anything. So if you're basically just going to ride the wave, unless MVRV is positive, you're sometimes not going to be very happy. So understand that the MVRV is essentially like almost like this model a little bit, if you want to look at it this way. If it's in that opportunity zone below 15%, you can look at it as a bullish divergence. If it's at least in negative territory, semi-bullish. Right around neutral is yellow, so on and so forth, right? Red would be when it's really, really high up there above that danger zone. So you want to kind of act accordingly and understand this is not a guaranteed price goes up if negative, price goes down if positive kind of model. You have to take everything with a grain of salt and understand that there are basically degrees of confidence that prices will go in the direction that they're implying. Hope that makes sense. As far as weighted sentiment goes, this has been an interesting story as well. We're seeing a trend that has gradually transitioned from positive in late 2021 to kind of indecisive in December, January, early February, to basically nothing but negative for the past 2 months. And that's a very interesting development here. We're seeing week by week, the standard deviation of the volume multiplied by positive versus negative commentary on social media is showing negative commentary is the dominant presence right now. This is probably an incomplete bar, so keep in mind it may not quite be this negative, but I can definitely tell you it's another negative week overall and probably sitting somewhere in this region again. So keep in mind the fact that there is a lot of FUD going on, despite the fact that circulation looks pretty solid right now. And that's a recipe for some good things in the weeks and months to come if this pattern continues. And that's a big if, of course, because of course the FOMC comes up in a month. There are plenty of real-time, real-world factors like the Russia-Ukraine war, the pandemic still being present, inflation still being on people's minds, all sorts of things. But in a vacuum, very good sign here that the crowd is still quite negative on Bitcoin. And it looks this way for a lot of assets too. So don't think that this is isolated only for the #1 market cap asset. Supply and exchange is also looking quite good right now. I will zoom it out to the last 5 years to give a really big macro look at what's been happening to the supply of Bitcoin on exchanges over time. We saw that there was a pretty rapid rise in supply on exchanges where there were less than 5% on exchanges way back in 2017, but that grew substantially as more and more people got into crypto. Interestingly, and this is common, you'll see that it'll peak at the end of a bear market and start to decline as bull markets start. Now, this is very macro. Keep in mind, we're looking at 5 years. So if you're looking at supply on exchanges on a daily basis, you're in for a rocky time if you're going to buy every time supply goes down a few inches and you take profit every time it goes up. Keep in mind that this is a trend that develops prices long-term over time. So considering the fact that March 2020, we were at about 16% and Bitcoin is now at about 10%, that's a 6% decline over the course of about 25 months or so. A pretty nice sign. And we're actually, with us being around 10% now, we're sitting at the lowest levels since November 2018. And I haven't seen any signs of this trend stopping. So we can expect that it's going to drop below 10% and continue to move down into lower single digits unless there's a cataclysmic event in crypto that completely changes traders' behavior and how they want to store their Bitcoin. All things considered, as long as we aren't seeing big rises in Bitcoin moving to exchanges, that means that there is not huge growing risks of massive sell-offs for Bitcoin, because that's where the sell-offs happen. They've got to be on exchanges for the most part. So another very good sign here. All right, let's move on to Whales, see how they've been doing here. We'll start with the supply distribution. We're looking a little too macro right now, so I'll zoom into the last year. And we have seen that the key stakeholders, which are the 100 to 10,000 coin holders, have mostly been declining and taking profit on their assets. So we talked about a few bearish signals. This would be one of them. The whales in crypto, who have the most pull on where prices go next, have decisively continued to move their Bitcoin out of their portfolios and into smaller wallets. And that's generally a sign that prices can decline. That said, we did have a decent start to the week where we saw an increase of these Bitcoin move from 47.96% to a peak of about 48.19. So they actually added themselves about 0.5% to their wallets, not of the supply, but of their current holdings here. They added 0.5% to their holdings. I hope that makes sense. So that was a nice sign, but it's not much, right? Like we can see very clearly there's a pretty nice or not so nice trend moving in the downward trajectory still. And until we see, a continued rise, it still looks to be a signal that whales are not confidently holding their Bitcoin right now. It doesn't mean prices can rise. Whales are often wrong, and sometimes they'll FOMO in themselves, after enough growth, right? Like we saw a lot of profit taking prior to this rise from the 13th to the 29th, where it jumped about, what was that, 26%. So they're not always just accumulating on the very short, rises like they did here really masterfully in January. But we try to look at the long term here, and the long term shows us that they are not continuing to hold at the same rate that they were. And that pattern has been going on for probably, it looks like just about 6 months now. They started in late October. So we're coming up on a 6-month duration for how long it's been. Before that, we can clearly see there was a pretty nice accumulation rise. So, you know, we start here in October 2020, and we see what that did to the price. There was a decline here. I know I'm turning into a TA trader with all of my X's and O's and just messifying this chart here, but bear with me. They started taking profit about a week and a half before the then all-time high in April, and look what it did. If you were tracking their profit taking and followed suit, you would have had ample time to get out before, you know, that one final leg up and then the huge drop down that wrecked quite a few people in May. But right after, you know, that's when they really started to accumulate again. We saw an eventual further all-time high in both October and then November, and they've been declining ever since, just pretty similarly to what they did in April. They started taking profit about a week before the then October all-time high. There was an extra leg up that was unexpected by many, or expected by a lot of the FOMOers, I should say. So I shouldn't generalize like that. But then they really started to plummet here. So right now, it does appear that we're in a dump phase, and you have to be a little cautious of this kind of signal. In the same note, we can look at, I'll just add it here, whale transactions above $100,000. I really like this metric, and I've been playing with it quite a bit over the past week or two. Generally speaking, we look for whale transactions as top and bottom signals, especially if we make them a little more zoomed out intervals. We can look at, we'll just look at a day. Well, let's do like a full week, see how that looks. Yeah, that's pretty nice. So generally speaking, when you see these big spikes like the largest one that we've seen in the last 2 years, that's going to be a direction changer. So in this case, we had the largest spike in February 2021. Immediately, we saw prices go from 57K all the way down to 45K. Whales started, you know, going back to their usual pattern for that time at least. We then saw one more uptick. We saw an uptick here right before the all-time high. That would have been a good top indicator. And then another one, this one was interesting. We saw kind of a semi spike here and then a larger spike as the price was going down. So there was kind of dumping going on right at the top and as the price was already plummeting. And eventually whale transactions kind of settled down. This wasn't really the best indicator. It wouldn't be fair to call these spikes. But this was generally spike, especially if I zoom in and you can see it a little better. This one here kind of indicated this is when whales were starting to accumulate, you know, when people were really starting to wonder how far down we were going to go. I can zoom in here and I think it'll be a little more precise. Sort of, not as much as I wanted, but the whale transactions here really started to pick up. Probably some accumulation happening there, and then one final accumulation spike here right at the bottom, and this was the last, basically the bottom of 2022. And right now they're kind of settling down. You see it a lot more with altcoins. So I can give an example of like Compound, which had a really good whale spike this past week. Check out what happens with smaller market caps and how much more clear the bottom and top indicators are. Huge top indicator here, for example, this one as well. Pretty much every one of these large spikes indicated that a direction change was going to happen. Even like these smaller ones here, relatively speaking, this isn't a big spike, but look at the surrounding whale days around it. And if you see that like one particular day really stands out, don't just compare it to like the last 6 months or last year, just compare it to the last few days around it. And if it's sizably bigger, that's likely indicating that some whales are becoming pretty active. And so this was a good profit taking one, another good profit taking spike, another good profit taking spike. And then finally, we had a big run up here. So initially, pretend you can't see these last 3 days. If you saw just this spike as the price was dropping, that would be a pretty good sign that there's some accumulation happening here. And then as it was rising, the whale transaction count got larger and larger, indicating that they were being very active here and taking heavy notice of compound and likely were profit taking on the way up. So kind of like volume for UTA traders, if you see the bars of those volume rising steadily, it indicates that people have interest in that direction. And if it's dropping, they don't have much interest in that direction, and it might continue going that way. So I think whale transaction count is something we'll try to look at more and more. But especially for altcoins, especially if you guys have an ERC20 request at the end, we'll try to take a look at how their whale transaction counts are doing. But for Bitcoin, mostly pretty neutral for now. Let me go back to Bitcoin just to fill out a few final metrics. Exchange flow balance, we had some interesting action just in the past 24 hours or so. This was the largest difference between exchange outflow and inflow since March 11th. So a little over a month, 5 weeks or so, since we had a spike this large. So a difference of 24,167 Bitcoin or so were moved off of exchanges, which of course gives credence to the supply and exchange drop that we just checked out about 5 minutes ago. Mostly these bars are continuing to show that exchange outflow is the dominant trend right now. And that's a good thing. Usually when we see these large spikes, we see a rise a few days later. It's not always going to be the case, kind of like MVRV. These are confidence indicators where the larger down they go, the more likely that a bounce can occur. The larger they go up, the more likely a retracement will happen. But considering we just had a 5-week high in exchange outflow, I'm optimistic about this one. It means that people aren't really getting swayed or pulled into, selling at a loss here, at least substantially. And I like this sign. I'm curious, Maxim, do you have any thoughts on the exchange metrics? Anything you'd like me to check out?
Lately, it's not so much of really value for Bitcoin, Ethereum. And I mean, the trends are a long time. It's less and less supply, and Ethereum even more severe, but doesn't change or doesn't help you really to do market analysis anymore. Mm-hmm. It's not as much as it was in 19, 20 years. It's good to observe, but
yeah,
I wouldn't, unless we're able to spot some specific transactions between maybe non-OTC, just retail, or purely hold whales and exchanges, then maybe. But it's additional data science work we need to do now on top of it. So I have no specific opinions at the moment.
Mm-hmm. Gotcha. Thank you. Okay, development activity, not much. Social dominance has risen a bit over the past month, which is a good sign. It bottomed out here right around wartime about a month ago, and altcoins were really being talked about a lot, but it quickly jumped back up. And I generally like to see 20% or above as a good resting point for social dominance. And it got very close a couple days ago. It's back around 14% today. So altcoins are still being talked about pretty often, but I think it's a nice sign to see that Bitcoin is starting to get back in people's focuses once again. Okay, a few more models I'll show, and while I'm doing that, Balresh, if you can collect a few assets and just queue them up and let me know what they are in just a couple of minutes, okay?
I think already people requested Ripple and I think what was this? MATIC. Mm-hmm.
Okay, perfect. Two good ones that we have plenty of metrics on.
Mm-hmm. Mm-hmm.
Before we go into XRP, I want to show the MVRV model that is indicating that because we've dropped off so much in both the short, mid, and long term, the majority of assets are looking to be semi-underbought right now. A few are actually fully underbought. Loopring is one that's really been hammered a lot. Ren has been hammered a lot. 1inch has been hammered a lot. Litecoin, I don't think this is correct. I think there might be something weird going on with Litecoin's MVRV right now. So apologies and feel free to ignore this one outlier. But it is pretty, it actually had a pretty good day yesterday, I saw, but it's probably going to be somewhere in the mid-range, semi-underbought as well. So that's a good sign for the altcoins. Obviously, they're all going to be a little contingent on how Bitcoin looks, which is a little more neutral. It hasn't been hurt nearly as much as altcoins over these past, 5 months or so since all-time highs all over the place and then big plummets. So keep in mind that altcoins look pretty good and underbought right now, considering how underwater a lot of traders are. Another important thing to pay attention to are the funding rates, which have mostly leveled out. They were quite bearish. They were quite bearish and showing a ton of shorts, especially here. You know, this is the average altcoin funding rate among multiple exchanges, and the blue is the average Bitcoin funding rate among multiple exchanges. You can see how much people were really shorting Bitcoin, give or take about, 12, 14 hours ago. I think this is when we were really starting to see a lot of people capitulate, and that is subsequently when prices were able to rise. It wasn't a huge rise, but it was at 39.8 there. It looks like it's updating as we speak, which is awesome. And it looks like right now we've actually jumped into slightly long range for the first time in almost a day or so. So people are becoming a little more optimistic. That's a little more normal on Fridays, because Friday is a day where we see prices jump, especially roughly 8 to 10 hours from now. We always see some sort of sizable volume boost, whether it's positive or negative. But for now, keep in mind that Bitcoin traders are still appearing to be, it's funny, it's still adjusting right now. They still appear to be longing a little more than shorting. And altcoins are moving in the opposite direction. People are getting a little more bearish on them, which means that altcoins have a bit of an edge right now based on history, if you put a lot of credence into funding rates. A few assets that might have particularly low funding rates right now: Bancor, Axie Infinity, Kava, Small Love Potion, and Waves, just to give a few assets where people are particularly in short range on right now. I'll also be releasing a how-to on using our whale transactions spreadsheet soon, along with a link that you guys can use to download and make a copy of. Generally, this is a way to find which assets out there are seeing heavy $100,000+ transactions being made compared to their usual resting average. A few that are showing signs of extra whale activity would be Fetch, Golem, and Litecoin, while most others are fairly dormant right now. The large number is the 4-hour percent change. The smaller number is a 48-hour percent change for longer term analysis. All right, let's jump into XRP here and see what we see as far as bearish and bullish divergences go. Okay, beginning with utility metrics, it looks like not much is happening in terms of circulation. either good or bad, so that's generally neutral. A bit of a concern here on the daily active addresses side. So XRP was actually on quite a roll going into 2022, getting a ton of daily active addresses, especially as prices plummeted here. So this was a really interesting time where we saw daily active addresses rising, a big price drop occurred, but then an even larger price bounce happened, a couple weeks afterwards. But quickly after daily active addresses began to die off, they really bottomed out with about 37.5K in early April. And now it's back to about an average of 66K after peaking at about 143K. So it's less than half the daily active addresses that we were seeing at its peak a couple months ago. So I don't like the sign of that. It does look like there's less addresses getting involved on the XRP network right now. As far as MVRV goes, let's adjust these really quick, get them to 15%. Close enough. Close enough. All right, so pretty similar to Bitcoin. It looks like it had dropped into strong negative territory here. It did bounce as it got very close to the danger zone here, and it's still negative at about -9% right now. So overall, a good sign that XRP is underbought right now. Yeah, not too much else to say. Last time it got way into the danger zone was back in early February. Last time it was in the opportunity zone was late January, and prices did exactly what you would expect when it hit each of those respective markers. Weighted sentiment is interesting. It looks like there's been a lot of positivity related to XRP the last 3 weeks or so. I don't know what fundamental event might be causing this, but I'd fathom, considering how many altcoins are negative right now, I'd fathom there's something going on with XRP. If someone in chat or Maxim or anyone else knows what's been going on here, I'd be very curious. But it does look like the
they sued SAC or requested them to reveal documents, which showed something which can be considered as positive or was considered as positive by majority for XRP.
Yeah. That would make sense. Yeah, so it appears that people have been positively receiving that news release, but price has not behaved, which is often the case, because when you get, overly positive news, there might be an initial jump up, but it might be a case of, buying the rumor, selling the news here, where there's just too much euphoria and people need to realize that they need to pump the brakes a little bit, and it may not be so exciting. And maybe once they do, the actual true good news that came from it will pump the price a little bit. But for now, it appears as though people are still quite positive toward XRP, and we'd want that to come down a bit, because these were the 3 largest positive spikes we've seen, at least in the last 3 months. Let's go back to the last year just to see. Yeah, so like these were the largest 3 positive spikes in the last year for XRP. Even the last 2 years. Yeah, it looks like April 2021, when we saw that all-time high, was the last time people were this euphoric about XRP. So that's not a good sign. We want to see people a little more negative toward XRP. That's when the price pumps generally occur. As far as whale transactions, not much to say. This would have been a pretty nice time to get out of your position, considering how many whales were very likely dumping right here on this spike. You can see that the top indicators work quite well with XRP. Tons of XRP spikes here. This was a huge spike, top indicator, top indicators here. I'm looking to see if there are any that, like this one might have been a bit of a bottom indicator. If I zoom in here. Yeah, so like this was the second largest spike over the last 3 months, and it came as the price was declining, indicating this was an accumulation spike, and that would have been a good time to jump in. And it's been neutral ever since. So there hasn't been much good alpha since this bottom indicator and the top indicator right here. We'll skip whales. I don't think it's very good alpha on the XRP side as far as supply distribution goes, simply because there's such a large amount of addresses, a supply held by the 10 million plus tier. They hold over 73%, so it is more of a centralized asset. Social dominance, not much to say there. Let's take a look at the XRP ratio of daily on-chain transaction volume and profit to loss. That's a lot of words, but it is a very, very strong metric in my opinion. So let's see, I'll mark the 1.0 line right here so we know when things go into negative territory, right about there. So anything over this line means there is more profit being taken than loss being taken. Anything below, vice versa. This worked out as a really nice bottom indicator. It looked like there was only a third of transactions that were taken in profit compared to in loss. So this was the capitulation sign right here. And what do you know, as soon as the day ended, prices really started to bounce. Not a serious bounce by any means, but at least it's moved in the right direction. And these bars here are essentially neutral. They wouldn't be considered spikes. You know, arbitrarily, if you want to look at it this way, maybe something like 2.5 or above is something I've seen as a decent range for true top spikes. So anything above this, you know, here and here, that would have been a really, really nice top indicator. This one sort of, even though it was very short-lived and then bounced, you know, higher. And then this was a really nice top indicator too, even though there was a bit of noise afterwards. This would have been a really nice spot to profit take. So right now, pretty much stuck in neutral. I'd say, you know, with the last spike being a bottom indicator 4 days ago, it's a better sign than usual. So I'd call this maybe a very mildly bullish indicator right here. And yeah, I'd say that's a pretty good synopsis for XRP. Anything you want to add on XRP, Maxim? Or
only that, only that XRP is established coin, so like anything in a top 10. Expecting it to behave very differently to Bitcoin or Ethereum, I would not. They move more or less similar. Some variation exists, but if we're looking to something really go in a completely different direction, you need to go out of top 50. The surprises can happen. Otherwise, I always look at, okay, what is the general market? And then you can analyze Bitcoin, Ethereum, or even XRP. You will see similar patterns. And if you understand one, you understand the others. So this one I won't do it.
Yeah, well said. The large caps especially, there's going to be much less likelihood of them decoupling from Bitcoin. If you're looking at like the 300 or 500th largest market cap asset, then you'll see a lot more decoupling if you're, you know, in more of a gambling mood, right? So keep in mind that XRP does stay fairly correlated to Bitcoin, Ethereum, and the other top assets. Okay, let's end with MATIC here and take a look at what's going on.
And remember, Brian, for MATIC, we have MATIC token on Ethereum and also MATIC token on the native.
Yeah, great
chain.
point.
I hope I remember there was some kind of bug with MATIC node. Let's see if it's been fixed, but we will see it later.
Yeah, we'll check it out. We'll start with MATIC here and then go into PMATIC and see if anything looks different there. Beginning with circulation, it looks like there isn't much to say. We had a very, you know, moderate uptick here the last 2 out of 4 days, but it wasn't much to write home about. Overall, it does look like the circulation is declining pretty substantially, actually. So it peaked at about 87.9 million per day around mid-February, and it's down to 36 million now. So that's a concern for sure. We'd like to see utility pick up for MATIC. But a lot of altcoins do look like this right now. There's been quite an exodus of token circulation for a lot of altcoins as their prices have really taken a beating these past 5 months. Daily active addresses, same thing, pretty big decline. We can look at where it was in January, 7,400 or so, and it's now down to 4,000. So many less addresses interacting on MATIC. Not a good sign as far as utility goes. As far as MVRV, let's take a look. Get rid of these. Actually, I'll just move this up to, let's go 6 months. And then we'll move it up to 15%. And 15%. Boom. Okay, so really interesting. It looks like MVRV on the 30-day time scale, it's bounced right off of it. So this would have been the perfect top right as you hit 15%. And then it almost bounced right off of it here for a perfect bottom. It got to, it looks like negative 13% instead of negative 15 before it bounced a little. And it still appears as though traders are well underwater right now, which is a good sign if you're looking to open a position or add to your position in MATIC for much less risk than usual. We did get into an opportunity zone the day of the war announcement, where a lot of altcoins were hit very hard. This would have been a great time to accumulate. Same with late January, great accumulation time here. And then the top indicators worked out perfectly if you were looking to start taking profit after it entered the danger zone. It did so here, it did so here, and it did so here. So MVRV does look like a very reliable metric for MATIC, and right now it's looking more bullish than usual. Weighted sentiment, very negative, just like Bitcoin. I said a lot of assets were like Bitcoin. XRP was obviously an exception. Pretty much since mid-March, we're looking at about 5.5 weeks where things have been quite negative toward MATIC after there was a ton of euphoria going on in late February to early March. So there's been quite a flip-flop in sentiment toward MATIC right now. And if you're still on the MATIC train, which it sounds like the person who requested it is, and probably the person, it might have been the same person who requested it last week, you're in a better spot than usual, considering the crowd is kind of on the other end of the spectrum and don't believe much in MATIC. Whale transactions, not much to say other than it's been a continued decline. Probably not a great sign considering the $100,000 plus transactions were like 1,300 or so or above in December. And now we're looking at like 100, yeah, like between 80 to 150 or so most days for most of April here. So whales are much less involved than they were. This looks like it was a great bottom indicator, by the way, right at around 6 months ago. Top indicator perfectly timed there. Good top indicator there. These were great top indicators. Yeah, all of these were great top indicators. Top indicator there. And then this would have been your bottom indicator right here as prices were finally declining and we saw a big whale transaction spike. So keep an eye. And if you see a spike like this as prices continue to decline, any spikes we see right now would definitely be, not definitely, but almost certainly an accumulation spike rather than a dump for MATIC. So if you see a spike, that's a nice buy signal for you, historically speaking. As far as supply distribution goes, let's take a look at whales. I'm going to add the 100 to 1 million, 100,000 to 1 million, and 1 million to 10 million tiers and see what's been going on. I see a good sign right off the bat, this red line indicating the 1 million to 10 million address, MATIC address tier is moving up and has been since February 21st or so. they have added, looks like about 0.8% of the supply and about 10% in total to their holdings. So that's, no, I'm sorry. No, I'm reading it right. It is 10% of their holdings, and that's pretty sizable. So that's a nice sign there. Overall, you know, you look at the last 6 months, they were holding way down at about 7.4% 6 months ago, but they've added about 1.4% of the supply since and about 18.7% to their holdings in total. So the 1 million to 10 million tier is a very solid bullish indicator in my mind. I would be curious how many of these addresses are exchange addresses, but generally speaking, I like to look at people holding, traders holding between $100,000 to $10 million as kind of that top tier of whales that are actually active. And this red line does qualify as that top tier. The lower tier, lower end of that top tier would be the pink line, and they're more in neutral right now. They also hold a very, very small percentage of the supply overall. So maybe not the best alpha from the pink line. I'm just curious how the yellow line looks. So yeah, they own a very relatively small amount too and have been declining, but this isn't much impact on the price because it's such a small percentage of the overall holdings. So I'd say the red line is probably the best to look at, and it does appear that it's moving in the right direction. So I like that sign. This 10 million plus tier, like I said, these are going to be mostly exchange addresses, and because MATIC is still a relatively young asset, you're going to mostly see continued decline as the exchange addresses distribute to the smaller addresses over time. See if there's anything else here. Interesting, slight social dominance climb. It does appear this is probably related to some of the negative sentiment going on, and it's at its highest point since March 11th. So about a 5-week high in social dominance right now. I'd be curious what's causing this. It could just be the natural price decline that's catching people's interest, and people being way underwater on MATIC now, especially if they were buying up here, or, you know, better yet, back here. They're probably not very happy about it. So that has something to do with the larger social dominance spike. Daily on-chain transaction volume and profit to loss. So this would be the 1.0 line. This would be 2.5 way up there. Good enough. So it looks like there was a lot of selling at a loss over the past 10 days or so. This line here is the first time we actually went into a territory where there were more transactions taken in profit than loss in about 10 days. But this is a nice sign considering how many people were capitulating here. We'll see if that has an impact eventually. Obviously, this was a perfect top signal here, even though it ranged for a few days after. If you took your profit on March 28th, as the ratio of profit to loss was way up at 14, so 14 times as many transactions taken in profit versus loss there, that would be a very nice signal for you to take a little profit. This was a pretty nice sign as well. This was a little premature, but still you wouldn't be too unhappy taking profit with 11 times the amount of profit transactions as loss transactions. But yeah, it looks like it's probably a better sign than average considering how many negative days we've seen with more transactions in loss than profit over this past week and a half or so. Whale transaction count, not much to say at all. I think we already looked at it anyways. Yeah, we covered that. So yeah, let's take a look at PMATIC. What's the ticker for it, if anyone can tell me?
You enter the same MATIC and then we'll see like a native.
Got it, Polygon MATIC.
Mm-hmm.
Oh, let me switch it on the big one here. Okay, so this is the Ethereum-based MATIC. We are looking at Mostly the same on the circulation end, a continued decline. Daily active addresses, same thing, continued decline. We don't have MVRV for PMATIC. We did see some interesting positive spikes here, but I kind of want to, I feel like you have to take this with a grain of salt because it's not a well-known ticker compared to MATIC. What would you make of this? Anything here, Maxim?
Nope. No, I didn't follow them for some time. I don't know what happened to them.
Yeah, this could just be a naturally occurring, some people on social media mentioning PMATIC and how it's a good investment, and some people jumped on board. Nothing more, nothing less. Whale transaction count, pretty down at the moment. I don't know if whales would be a very good thing to look at, but let's give it a shot. Let's see how the supply is distributed for PMATIC. So we're looking at 10 million plus owning about 78% of the supply. Let's get rid of that. Okay, we'll combine all three of these and see how the 10K all the way up to 10 million PMATIC addresses are looking right now. Yeah, it does. It definitely looks like there's some good alpha here. So huge accumulation going on from early February all the way up until early March as prices were declining. And then as things bottomed out, especially here as prices finally rose again, look at how they took a substantial amount of profit. This would have been a good time to take notice and potentially get out or take some profit yourself, because the decline after this profit take was probably imminent. At the same time, we see them accumulating a ton here. They took profit on the exact same day that there was a local top on the 8th, started accumulating again, and then they were dumping. So if you started to see this dump going on, that would be a concern for sure that prices were going to decline. Of course, this was a market-wide correction, but PMATIC especially, since its peak at 289 to its bottom here, that was about a 51% decline in price, and whales were already taking profit prior to that. So good alpha there. Yeah, I'd say if you're looking at PMATIC, take a look at this 10K to 10 million coin tier as some nice alpha for you. And we'll see if there's anything else that I can add on the PMATIC side. Social dominance. I mean, it's very rarely talked about. These spikes are like 16 mentions of PMATIC. So I wouldn't pay much mind to social volume when it's this small. This would be a good metric though. Let's see what we have here. So that's still at 2.5. Make sure this is sitting around 1. There's 1. Full screen that. Okay. I saw this on a few other metrics, so I don't think this. I think this was just a missing day for whatever reason.
Yeah, exactly. Actually, you can pin the Anatoly. I think we missed this few days.
That's okay. We're gonna put a teddy bear there, so you guys can just see something else instead of the gap. Don't worry about that. As far as the ratio of daily on-chain transaction volume and profit to loss goes, we're in pretty much a neutral range right now. These would have been your top indicators. You would have been just fine taking profit a bit early here, and then again here, that was pretty much right before the local top. This was right before the local top. This was right before the local top. This was, all of these were calling local tops quite precisely. But you can tell, especially when they're really, really high up, that's when the tops are quite accurately predicted with this metric. And on the bottom side of things, there's some alpha too. This was another gap in data, so ignore that. But I think, this kind of bar right here, that's a legitimate, very negative spike, indicating there's way more transactions taken in loss than in profit. And what do you know? That was right before the bottom. So I like that as some good alpha. This as well, this was right at the bottom. I'm not just like hand picking the ones that prove my point the best. Like I'm literally just looking at the lowest ratios, guys, and most of them do correlate with bottoms. Here, here, here. That's not a good example because obviously it did bottom very temporarily, but then dropped. But for the most part, if you're looking at this ratio and you find the low ones, those are pretty ideal buy points. But more confidently, this metric will call the top for you quite well for PMATIC. And right now it's looking pretty neutral, nothing too extraordinary to say. Other than prior days, we're looking to be decent bottom-ish indicators. So very, very mildly bullish, I'd say, on this one. Yeah, I'd say we covered XRP and MATIC and PMATIC pretty substantially. I hope you enjoyed the Bitcoin analysis as well, guys. Anything you want to add on the markets going into the weekend here, Maxim?
Oh, when you ask in this way, in the beginning, I just wanted to say in the beginning of our stream, someone asked in the chat if we could look into MakerDAO statistics. Actually, we did look. Don't open, it will take another 15 minutes. I will give it a summary. What we saw there when we were analyzing it today and yesterday, and good for the positive or bullish case picture. Debt is not being created for quite some time. Ever since we hit the bottom several weeks ago, the amount of debt on the MakerDAO hasn't been increased. It's a good sign. Those who are likely will start leveraging and increasing debt, they're not there yet. So it's not too many participants. New debt minted only was one small, kind of very small spike, maybe a week ago. Nothing ever since, and that one was low enough. And debt repaid was a little bit activity. When you sum up everything, it looks like it represents the following crowd sentiment. Whatever happens in the bottom is not convincing. They're not committing their money to enter anything related to bullish case. Surprisingly, yeah. Because when we see posts and mentions everywhere, Bitcoin will be 100,000. I read it and I say, wow, something does not fit. There are talks, but I don't see actions on the chain. So whatever it means, yeah. I do believe it's a good sign. I trust in this case more on-chain data, but the total amount of still positive news, it's a bit concerning. Yeah. I mean, total amount of too high expectations that we will make new high, and it will be 100,000 or a million, whatever for Bitcoin. That's concerning. It could be that we need one more dip, so I don't exclude this possibility. But for the short-term metrics we've seen the last week, yeah, it's a good chance we should go a bit higher. Of course, not investment advice. But yeah, this is a summary. If in ideal world, if I would see for 3 days in a row, no mention on Twitter or on Reddit or on Telegram or Discord channels I'm following of someone predicted that Bitcoin or Ethereum, for whatever reason, we will get the new all-time high for 3 days in a row. If I don't see, that's a strong bullish case. But I still keep seeing it every second day. So this keeps me concerned a little bit.
You heard it here first, guys. Cut out the all-time high euphoria and Lambo and
yeah. Well, you cannot control it. It's a representation of some kind of expectations. There is still quite some expectations. But you have what you have. maybe something will happen. Maybe we'll just shortly drop down and swiftly recover, but suddenly market changes happen. We'll see. Yeah, at the moment I'm still gently positive, but not extremely bullish.
Yeah, and the metrics back you, Max, and it looks like there were definitely over half the metrics we looked at for Bitcoin were showing a little bit of a bullish bias. So, yeah, for sure. I think this should be an interesting time right now, and the FOMC in May is kind of the final nail before, hopefully things kind of break open toward the second half of the year. So we'll see how things go. Yeah. Appreciate all of you for jumping in and joining us for today's call, especially if you stuck around the entire way. Let your friends and family know if they're into crypto as well. We're here every Friday at 2 p.m. UTC. Referral links are in your account settings if you'd like to make a little money off of the referrals for them signing up for Sandbase Pro. And as always, we'll see you all on Discord and hope you have a very safe and pleasant weekend.
Yeah, stay safe.
Cheers, guys.
Thank you, Brian, for running. Bye-bye.
Thanks, Max and Max. Bye.